Good morning and welcome to another pre-market session with the Market Trader. Hi, my name's Ray, Market Trader, and we'll go ahead and begin to review the markets. But before we do, let's take a look at our risk disclosure here. Okay, we're going to go ahead and start with our risk disclosure. Just want to remind everyone that the content is being published and distributed by the Market Trader and its affiliates is to be treated as general information only. None of the information provided by the company or contained herein is intended as investment advice and offer to buy, sell, recommend, endorse, sponsor any security, company, or fund. Use of this information contained herein is to be used at your own risk, and the company, its partners, representatives, agents, employees, contractors assume no responsibility or liability for any use or misuse of such information. We all understand that future trading contains a fair amount of risk and is not for every investor. Investor could potentially lose all or more their investment capital. Only risk capital, money that can be lost without jeopardizing one's financial security or lifestyle should be used when trading, and only those individuals with sufficient risk capital should consider trading. Again, nothing contained herein is a solicitation to offer, buy, sell futures, options, or forex, and past performance is not necessarily indicative of future results. Okay, so now that we've gotten our risk disclosure out of the way, we're going to go ahead and open up the news portal here and take a look and see what the news has in store for us today. So we do have some wholesale inventory numbers coming out here at 10 a.m. Okay, we have the inventory report coming in for crude oil at 10:30 today. So that should be something to be aware of for those crude oil traders. We have Fed member Barkin speaking here at 11 a.m. We have some note yields reporting here at 1 p.m. And then I would say that this is probably the granddaddy of all, and that is there's a lot of eyes are going to be placed on what they're going to do with interest rates, given all the tariff news. Okay, at 2 p.m. Today, FOMC. All right, and then we have some additional executive orders being signed here at 2:30, and then we have ECB Montagner, if I pronounced that correctly, speaking here later this evening. But that should not have an impact on us today. Okay. So now that we have a feel for the news here, we'll go ahead and jump into the markets, and the market we'll kind of entertain here first is the gold market. Okay, so we'll go ahead and switch over to that. Okay, so we'll start here and open this up here to the charts. Okay, so you can see here we have our daily view of the gold market. We had been on a steady decline, and almost to the point where I was in the position where maybe we were kind of maybe potentially changing some structure here. Okay, as soon as I felt like, okay, we're changing some structure, we're going to be looking at maybe some areas below. We create in the midst of a bullish candle here in the gold market. Okay, kind of creating a little bit of a 3-bar reversal at the 3,000 level, which was a prior area of resistance, now becoming support. Okay, so again, was this merely a pullback, or is this merely a pullback of some bearish structure? We'll have to wait and see. Okay, so moving on to the 4-hour chart. Okay, looking at the 4-hour chart here, you can see that let's go ahead and turn off some of these levels here. I'm going to go ahead and turn off ADR and ASR here for the moment. Okay, we'll go ahead and leave initial balance, but I need to probably change that, not from Tokyo, but to the day session here. Okay, so we'll make those modifications. Okay, so again, we're starting on the 4-hour chart. We're starting to, make some higher highs and higher lows. I don't know. This feels to me on the 4-hour chart feels more like a retracement of this swing rather than necessarily an impulsive move to the upside. So we'll have to kind of monitor this. Obviously, this 3,000 level is a level of importance. We've been at this level quite a bit of late. So we'll have to see how we kind of navigate around, let's say, 3085 and let's say 3032. Okay, is kind of what I'm seeing on the 4-hour chart. Okay. Now, if I assuming that I am in some sort of bearish structure, and I do some analysis here on some extensions here. If I do this kind of analysis, you can see that if we get any sort of kind of measured move, okay, we're kind of looking at 28.57 in this market below. Okay, in short time, 29.46. Okay, so these are a couple of maybe some potential destinations of this market here. Okay, based on the recent swings that we've received. Okay, so I'm kind of looking for my arrow tool. So yeah, so this level here or this level down here is kind of what we're looking at potential, okay, of a move. Assuming again that this swing that we received here is the swing that's the dominant swing, okay, that we are in, okay, and this just basically meaning that we are just in the midst of some sort of pullback, kind of for those Elliott wave folks, A B C, and then we head down, okay. All right, let's take a look at the 30-minute chart and let's see what the 30-minute chart has to say here. So we have our initial balance range getting established here, right around an area where we would expect some sort of support here, right around this 3060 level. Okay, so I believe 3060 was an area of some prior support here. So I'm gonna go ahead and open up my drawing tool, and then this is going to be, I'm going to go ahead and draw this in green, okay, and see if this area is going to indeed hold, okay, and provide some support for the bulls, okay. So that would be kind of a logical area for me, okay. Otherwise, it stands to reason that if we do break this level, the natural target for the move, for maybe a move, would be down here, down by VWAP at 3045. Okay, 3045 would be the next logical location, assuming that we do not hold this 3055, 3060. Okay, so let's go ahead and open up our fixed range volume profile here. Okay, and take a look and see what the fixed range volume profile, has to say with respect to price. So we're going to go ahead and locate the start of yesterday's trade here, back here. Okay, drag that across to the close. Okay, so you can see that we do have a fair number of longs in this market. Okay, so we are above value, okay, in this market, and I'm going to go ahead and draw the value area high line here. Okay, you can see that we're above value area or value from Tuesday. Okay, so this 3037.3, okay, is a significant level, I would say. The expectation is that should we come back to this level, right, that I don't think we're going to immediately accept value, although it's always possible, that we would get some sort of bounce away from this value area high. Okay, that would be kind of a logical location for price to maybe continue this bull swing that we've received of late on the 30-minute chart. Okay, let's see. I'm going to go ahead and draw in our anchored VWAP for the start of London. Okay, so start of London was probably somewhere in this range here. Okay, right about there is the start of London. Oh, that's not, what is it doing here? Anchored VWAP is right here. Okay, so you can see that price has made it below London. Okay, It's down testing the conviction of whomever or the folks that generated this bullish bar. Okay, is there still some buy liquidity here to continue this march to the upside? Okay, in this market. Okay, so this would be here. This 630-60 level would be kind of a logical level for price to head continue higher. If price closes back inside or back below, say 30.55, then I would say that 30.43 or 30.45 is very much in the cards here. Okay, so let's go ahead and open up our ADR and ASR, get a sense for where these levels are at. So we're well above average daily range. I'm going to go ahead and open up average session range for London here. This is New York, so we'll go ahead and change this to London. Okay, and so we are right at the cusp here of London's. Okay, so we got up to London's level. Okay, and we reversed away from that level. Okay, so the question is, are we going to reverse away? And notice that we have 30.36 here as another logical destination. We actually have average daily range and average session range providing us a similar level here. Okay, so it'll be interesting for me to see if price does hold in this area, and if it does manage to hold, then I would expect this scenario to play out. If it doesn't hold and we close below, say 30.56, then I would say that there's a reasonable chance that we can get back down to VWAP, maybe back down to value of Tuesday before we see any sort of reversal in price. Okay, so that's kind of what I'm seeing in the gold market. I'm about to move into the crude oil market, so we'll go ahead and move into crude oil. Okay, so we're going to go ahead and let's see. I'm going to use this contract. I think that's still in play here. All right. So as you can see, okay, crude oil has been in somewhat of a free fall. Okay, we've had gap opens in crude oil of late. Okay, so we have a gap here that was kind of viewed again on the next day. We have another gap open to the downside. Okay, so we seem to be in a very strong structure here to the downside, and I'm kind of looking here to the left to see where this current price, and I'm going to have to probably move to a weekly chart to get a sense for where this price can go. We're starting to break some weekly levels. We're coming down. We've actually reached a weekly level here around 56. So I would expect this level not to be something necessarily. This is a relatively strong level. We've had a lot of price action around this 56 level. Should we manage to get below that, well, the next logical level is around this 50 level. Okay, and then maybe as low as the lows of 2021, which that would be kind of a feat. Okay, so in any case, looking at the daily chart, crude oil looks very, very, very bullish, very bearish to me. Okay, looking at this is weekly. Let's go ahead and look at the daily. Daily is going to tell us the same kind of thing. We've had 1, 2, 3, 4, 5 straight days of bearish price action in this market. Okay, all supported by volume here on the bottom. You can see that volume is supporting. We're getting a little bit of interest here, maybe on the last candle here on the buy side. All right, moving down to the 4-hour chart. 4-hour chart, we can see, I'm going to go ahead and turn off our initial balance because initial balance is not in play since the crude oil market has not officially opened yet. Okay, so I'm going to go ahead and do a little bit of Fibonacci analysis here and take a look and see where this current swing that we're in will lead to. Yes, continuing to the downside. I think so, right? So I think next stop 53.42. Okay, and then maybe not ultimately, but maybe the next stop after that would be 48.29. Okay, so these are kind of a couple of levels here. By measuring this swing here, I guess you can consider this kind of a measured move, right? This is serving as our measure. Okay, we got a slight little pullback, And now I would say that 53.42 is very much in the cards. And then the next stop after that would be 48.29. Okay. So yeah, so that's kind of what we're, yeah, 48 is kind of what I'm seeing here, right? 48.29, 48.30. George, you're right on. You're right on what I'm thinking about here. Okay. All right. So let's go ahead and move on to the 30-minute chart. Okay, 30-minute chart. We're going to go ahead and take a look at the. So we've already very early. Okay, we've already exceeded the average session range to the downside. Now this is going to adjust with the open of the New York market, but the fact that we are below average session range low is significant. It is the giving us the possibility of a continuation move to the downside. I'm going to be particularly looking at 5660 right at the low here of this level here. Okay, that level right there. Okay, if assuming that this move to the downside is real, and there's really no reason to think otherwise, that this would create an opportunity for us right around 5660 for a continuation move to the downside. Okay, right? This is a level, right? You can see that we've had some support here. We broke through that support. So any sort of rally that we get back into the level with any sort of reaction away could offer us a opportunity for a continuation move to the downside. We also have daily VWAP kind of lurking in that same vicinity at around 5690, let's say 56 say 59 in general. Okay, so anywhere between 5660 and 5690, I would expect to be kind of a sell area or sell zone in this market. All right, we're going to go ahead and take a look at the fixed range volume profile. I suspect I know what I'm going to see here, but we'll look at it nonetheless. And that is we'll start off with the Tuesday session here, drag that across to the close of Tuesday, and you can see that price is well below value from yesterday. Okay, so we're going to go ahead and draw in the value area low, which I would also expect to be somewhat resistant to price. Okay, right around this 59.86 level, let's call it 60. Okay, 60 seems to be kind of a logical level for price, not only from a psychological side but also from a structure perspective. You can see that was kind of the last main kind of area where we've had a little bit of support. So 59.86. We have some ASR highs here that also can kind of stand in the way of further price exploration higher. Okay. Let's see. Let's open up our anchored VWAP here. Let's see what London has in store. Well, London is very much on the side of the bears here. Okay. You can see that every attempt to go higher has been met with sellers throughout the London session. Now we are a little bit extended to the downside. I'm looking to the left here, and I think we did come upon an area here. I believe it was on the weekly side. So I don't think this level here around 55 is necessarily going to break easily. All right, I think there is going to be maybe a little bit of a bounce. And really depends, I guess, on the EIA report that we're going to get later this morning. Okay, so right now, even though we are moving higher, okay, it doesn't seem to be embraced by any buyers here. Okay, the volume that we're getting is not positive, right? We are still negative on the volume delta side. So, and yet we are getting price to indicate that maybe it wants to head higher with this kind of buying wick. Okay, so I would say that we should be looking for opportunities to fade this market. Okay, I've already identified one at 5660. Okay, that would be an area that I would look to fade. All right, but given that we have the EIA report today, we have to be a bit cautious. All right, a bit cautious, maybe even potentially wait for the EIA to kind of publish before we take on any sort of executions in this market today. Okay, but I would say that heading into this session, I think the obvious view of this is to look for opportunities to enter bearish. Okay, bearish opportunities, I would say, is the path forward for crude oil. Now, with that said, if we start breaking some structure, let's say if we manage to get above 57, that would cause us to get above anchor VWAP and daily VWAP. If we can get above 57, then I would say that it opens up the opportunity for maybe price to explore the highs, okay, of the day, okay, around 58 and maybe potentially higher, okay. So we'll have to see what the EIA report provides us, okay. But right now, I'm headed into the market bearish in crude oil, okay. All right, let's go ahead and take a look at the Nasdaq, or as I like to put it, the NASCrack. Let's see, in contract as well. Okay. All right, let's take a look at this. Okay, so it looks like we are kind of creating a little bit of a bottoming pattern here, but let's take a look at the daily chart. Okay, and you can see, okay, that we've reached some of these extensions that we talk about, right? So I had done a Fibonacci analysis, right, from this swing up to this retracement, and we are at some of these levels, right? Some of these extension levels that we care about. Now we still have the 1.618 extension down here at 15,000. So that's still very much in the cards, especially if the market continues to be weak. Okay, so uh, so the market on the daily still feels bearish. Okay, we still are very much in a bearish structure here in the Nasdaq. All right, we are at some extension levels that could maybe provide us maybe a temporary reprieve, and I would say that maybe there's a strong a good possibility that we maybe potentially get down to this 15,334 level. Okay, that would be that kind of 1.618 extension of this move here. Okay, so let's see. Let's moving on to the 4-hour chart. Okay, looking at the 4-hour chart, as I was mentioning to you before, this is kind of where I'm seeing a little bit of a bottoming pattern here. Right, we have not of late have not been able to make any sort of new lows. Okay, so we have a reaction up. We reached the anchor VWAP from the Tuesday here. Okay, let's see if I can adjust this here a little bit to, yeah, well, this is probably the start of London. We got a push back up to this VWAP for London, and we got a reaction away. However, we have yet to make a new low. Okay, right now it appears that it's creating a little bit of a demand zone. Okay, a little bit of a demand zone here, right around let's say 16,750 ish. Okay, this seems to be a little bit of a demand zone created here. Okay, now the question is this area going to hold, and is this going to provide us maybe an early indication that maybe we are looking to maybe rally from here, or maybe continue in this kind of range? This is quite possible, given the large moves that we had to the downside of late, that we could be in for a kind of a digestion day today. Now with FOMC, a lot can happen here. Okay, if the FOMC comes in with some sort of messaging that they're looking to relax the rates given some of the tariff decisions, then maybe the market could receive that well and rally. Okay, so so that's something to be aware of. Okay, so it'll be interesting for me to see if this area that I've drawn in green does indeed hold. Okay, let's to go ahead and take a look at the 30-minute chart. Again, you can see that we are creating a little bit of a bottoming. We came down to this level, made an attempt to go lower, was received by some buyers. Again, we came back to this level, and again was kind of swallowed up by some buyers here. Okay, so you can see that the volume delta bars, right, are a bit more significant than what we've seen of late. These last two bars are showing that there is maybe a little bit of buy volume coming into this market. Now we're not certainly they're not out of the woods right yet when it comes to the bears. Okay, we still have this level above us here at 17,400. Okay, that would be would appear to be resistant. Okay, to price, and then we have some ASR levels above us at 17,600 and things of that nature. Okay. Yeah, absolutely. I think this might be, especially when it comes to the equities, and I would even say gold. Okay, that this might be a day to kind of sit on the sidelines, grab your favorite beverage, and watch the market fly. Okay, because we have the recipe for some markets to move as a result of FOMC. I would expect leading up to the FOMC meeting that we are probably going to remain in some sort of ranging kind of price action in the Nasdaq and across all the equities. So that's something to be aware of, unless there's some sort of leak on what the number or what they plan on saying, and maybe giving the hedge funds and institution an early indication of that number, which could cause the market to move here a bit. But my expectation is that we are going to probably remain in some sort of range here until the number is provided. At which point there should be a fair amount of volatility. Okay. Yes, grab a coffee and see what happens. It will be extremely volatile thereafter. I agree 100%, George. Okay. So let's come back to this a little bit. So let's see. Let's go ahead and open up our fixed range volume profile here. Okay, and we'll take a look and see where we stand with respect to value from yesterday. Okay, so we're going to go ahead and drag that across to the close. And there we are. Okay, so we are below value. You can see that we are below our value area low here. Okay, so this is our value area low. Okay, so below value, indicating that we do have a fair amount of sellers in this market. I would say, again, similar to I think what I pointed out. I can't recall whether it was in the gold market or maybe probably the crude oil market, but most likely crude oil. I would expect that this area, value area low here, to be an area where we could potentially, fade the market here around 17,000. Let's call it 600. Okay, this area here seems to be kind of a logical area where we could potentially receive a kind of a continuation of price to the downside. Okay, so this kind of being more of a kind of a consolidation or retracement for maybe a larger move to the downside. Okay, so that I'm going to be interested in looking to see what price does around 17,600. More immediate, I would say 17,400 is probably a more of an immediate decision that folks will need to make with respect to Nasdaq. Okay, but otherwise, we should probably be looking and continue to look for maybe opportunities where we could potentially sell some strength in this market. Okay. So that's kind of what I'm seeing in the Nasdaq. We've kind of reached some average daily low and average session low levels, but like I said, and as George has mentioned, with FOMC, all these levels get thrown out the window. Okay, because that's the kind of price event or a news event that could cause wreak havoc on any sort of statistical levels that you've created for yourself to understand the market. Okay. All right, so that's pretty much what I have for Nasdaq. It'll be interesting again for me to see if how we react around 17,400. Whether we kind of remain in range throughout the day until the FOMC minutes or FOMC meetings. Okay, at which point I would expect the market to be entertaining. So maybe like George has mentioned, grab a coffee and see what happens. Okay. All right. Let's go ahead and move on to the ES. I don't suspect that this is going to be all that different, but we'll take a look at it here just to kind of provide us some numbers. So we're going to go ahead and take a look at the daily chart here and get a sense for what the daily chart is. Okay. So you're starting to see some interest, right? We're starting to see some buying wicks here. We got a little bit of a doji candle that's being developed here. Now, again, I've already kind of preempted some of this review here by doing a little bit of Fibonacci extension analysis here. And let's see, let's redraw this just to make sure that yeah, it looks like I captured the correct level. So if we've already exceeded the 100% extension of this swing lower, okay, we're already kind of below the 1.13, 1.236 level, okay. So, and we came relatively close to reaching the 1.618 extension level. Okay. We came within, let's see, about maybe 50 points. Okay. 50 points from getting down to the 1.618 extension of this earlier swing. Okay. So let's go ahead and remove some of this now. Okay. And we're going to go ahead and jump into the 4-hour chart. Okay, and take a look and see. Okay, so you can see here that maybe I don't know, maybe there's a little bit of a bottoming pattern that's being developed here. It's hard to say. We have one side of the double bottom, okay, developed. Okay, a little bit of a double, but maybe a potential W pattern that's being developed here. So we have already completed a 3-bar reversal, relatively strong bullish engulfing candle. We made an attempt to go lower, okay, but that's been received with some more buyers. So maybe we have found some support here around 4,900 in the ES here. And again, maybe the FOMC will support this and allow us to hold here around 4,900. Okay, so that's going to be kind of my line in the sand here. Okay, if we are going to continue this bearish action that we've been seeing of late, we would need to get below. Let's say I'm just going to say call it 4,900 here. Okay, that appears to be a level of support at the moment. Okay. And again, this would kind of play out as kind of maybe a little bit of a W pattern here, right? Something along those lines. That's kind of what I'm kind of entertaining at the moment. Looking at the 30-minute chart. Okay, 30-minute chart, much like the NASDAQ, you can see that it appears that we are developing a little bit of a demand zone, okay, right around this level here, around 4,900, okay. The question is, can this area hold, and can we break above, say, let's say 50,045? Those are the kind of the couple questions that I have for this market. Okay, can we make a new high? Can we make a new high? And can we remain above 4,900? Those are the two questions I'm asking of the market. We'll be asking of the market today. Okay, it appears that we are destined to look at maybe revisiting some of these highs here around 5,100. Okay, but this area right here around 50,035 could continue to be resistant. Okay, or we can continue remaining certainly in range until the FOMC meeting. So it'll be interesting for me to see how we react around these areas. Okay, I'm gonna go ahead and do a little bit of volume analysis here. I'm going to go ahead and open up our fixed range volume profile here and take a look and see where price is in relation to value from yesterday. And like the NASDAQ, the ES is below value, indicating that we still have a number of sellers in this market. So again, this area above here, this area around 5085 or 5095 would be a kind of a logical area, right, to expect maybe a continuation move. If I'm of the opinion, and I would not fault you if I remain of the opinion that I'm still very much bearish in this market. This location here around 5,080 would be a logical place for to entertain an execution here to the downside. Okay, in this market. All right. All right, so let's see. Last thing I'm going to add here to this chart is my anchor VWAP. I'd like to see what London has to say about all of this. Okay, so we'll go ahead and add that here. And you can see once it gets drawn here that we are making an attempt to get above the anchored VWAP for London, although I would say that right now is being received by some sellers here. Okay. And again, this 50-35 level is going to be an area that I'm going to be particularly understanding, because again, we could easily kind of give us the indication that we're going to head higher, only to be received by some more sellers and head lower. Okay, so this area could offer us an opportunity later in the market today. Okay. All right. Let's see. Any questions on ES? I don't see them. Okay, so let's move on to the YM. Okay, we'll take a look at the YM. So YM 2025. Okay. All right. So we're going to go ahead and erase everything, all our drawings. I'd like to create as clean of a chart as I can when I'm doing this kind of analysis to start the day. And you can see here, again, we continue to head lower. I would say that the Dow appears to be a little weaker than the other two markets. Okay, because the other two markets were kind of developing kind of a 3-bar reversal pattern. We're not getting the same kind of effect here in the Dow. Okay, so we're going to go ahead and draw our extension tool here and see where we stand. Again, we are flirting with reaching the 1.618 extension, which is around this, let's call it 36,500. Okay, we're kind of flirting with reaching that level. Okay, of this bearish move. Okay, 36,500. I think, yeah, 36,500 appears to be that 1.618 extension. Maybe slightly below that. Okay, moving on to the 4-hour chart. Okay, 4-hour chart, we can see that again, we are kind of creating a little bit kind of maybe a double bottom potential here. Okay, we have a move lower that created a little bit of interest to the buy side. Sellers step back in, and technically we haven't made a new low, right? So right around this 37,000 level. Okay, 37,000 seems to be of interest to the on the buy side. Okay, what it looks like to me right now is that maybe we, again, similar to the other equities, that it could create maybe a little bit of a double bottom here. Okay, now all bets are off, obviously, if we make a new low and retest those new lows and head lower, right? But right now, what I'm seeing, okay, is that we are developing maybe a little bit of a pattern, creating a little bit of support around these areas. Okay, we are still seeing a lot of, we're still, volume delta is still indicating that we are bearish. Okay, but we are seeing some wicks here. Okay, some buying wicks showing that there is some interest here to the buy side. Okay, moving on to the 30-minute chart. Okay, 30-minute chart. We'll go ahead before we start looking at where we stand with respect to ASR and whatnot. We'll take a look at the fixed range volume profile. We'll take a look and see where price is in relation to yesterday's value, and we will drag that across. Okay, so here we are. Okay, so this is the level. Okay, so we have a level here around, let me see if I can, I don't know what's creating this. I suspect it's the Fibonacci tool. Let's go ahead and remove that. Okay, so yeah, 38,417 would be a logical level for me. We also have the ASR range, ASR high around that level as well. So this would be kind of a sell zone for me. Anywhere around this area would be kind of a sell zone. Would be a natural area for price to reach and reverse and continue lower. Okay. Otherwise, let's see. We got value area. Initial balance is still about 15 minutes away from taking place here. So nothing to discuss there. Let's go ahead and add our anchored VWAP. Let's add London to the mix here, kind of a way for me to kind of track London. You can see that the anchor VWAP is sloping lower. It made an attempt to get above this anchor VWAP, and for now has not been able to. Should that hold and create a situation that maybe we could head lower, right? Just by using both our anchor VWAP and our daily VWAP. The anchor VWAP seems to be a bit more sloping to the downside. We have a little bit more of a, I would say, kind of a flat daily VWAP here. And you can see that price has been kind of hovering above and below it. Again, given that we have FOMC today, that doesn't seem to be out of character here. Okay. So it'll be interesting to see. Again, it's advisable today to consider not trading. Okay. And if you must trade, then I would say that we probably need to wait for this FOMC meeting unless we get some sort of opportunity before then. Okay, but I'm going to be like George here and take my favorite brand of coffee here and kind of sit on the sidelines and watch this happen. Now, I may move into an entirely different market, which maybe has a little less exposure to some of this FOMC business, although it has its own news today as well, and that would be the crude oil, right? So probably a little bit more focus on crude oil today, given the FOMC meeting minutes, than because of the potential exposure to FOMC and gold. All right, so that's something that I'm going to do myself. Maybe a little bit more focus on crude oil today. Okay, so so that's what I have for you guys in today's open to public pre-market review session. Okay, we'll have these once a week, and if it's something that you are interested in seeing on a daily basis, I would encourage you guys to look at the portal and see if maybe there are some membership levels that would what you would be interested in participating in and supporting the channel further to continue to provide some of this analysis. Yes, I agree, George. I think crude does look good for continued downside opportunities. I'm personally going to be probably be more focused on crude oil today. Okay, because of that and because of the fact that we have the FOMC mini minutes. Okay. All right. Well, awesome, George. Pleasure having you on the session today. Okay. So guys, again, if it's a day, if it's a day to step away from the markets, I would say that this would be the day. Okay. You need to be extremely careful. Okay, with the amount of volatility we could potentially expect to see with the FOMC minutes, and I would say that we would all be better served, or best, we would be best served in probably setting this day aside. All right, sitting away from our charting platform, sitting away from our mouse on this particular day, because I expect that the volatility could be quite high, and when volatility is quite high, emotions kind of often take over, and we don't follow our processes, and combines take the path of no longer being here. Okay. All right, guys. Well, that's it for me. As I close every session, trade well, trade safe, trade like a pro, be a market trader. Have a great day, guys, today, and we'll talk again soon.